Hi, welcome everyone. We are doing a live stream today with Bookmap. Appreciate that platform. Really innovative. I always remember the first time I started using it, they used to have a guy with a blindfold on their website, and I thought that was perfect. Without seeing what's going on in the microstructure, the way they present it, it's hard to go back to a regular dome. So I've got a little PowerPoint presentation to start out with to lead into some live analytics, kind of the same MO, going through, doing some education, providing some awareness, things to look at, and then seeing how we apply them and seeing what's happening currently. And so we've got the end of the year here. We're in what's called a settlement phase, and I'm going to talk a little bit about that today. Before I get into it, I want to go through a disclosure. Cryptocurrencies, futures, options, forex, and stock trading contains substantial risk and is not for every investor. An investor could potentially lose all or more of that initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not indicative of future results. And all the information that we're presenting here is for educational purposes only and should not be considered specific investment advice or recommendations. I'm John Slazas from Dharma Capital Trading. You can get more information on us at our website, dharmacapital.trade. We're on X, YouTube, and Substack. So I've been trading for over 35 years, got involved in crypto around 2013. And I've really leveraged that in 2016 when Ether came on the scene, and I'm a big fan of the space and basically the whole transitioning to Web 3.0 and what we can do with digital assets. So big inflection point for everybody. I think it's all good. I'm going to present some of our trading tools that you can see, the things that we use, that we provide with our clients, and if you're interested in any of those tools, you can take a 2-week test drive with them, and we'll walk you through on how to best integrate that into your workflow. And what we do is we focus on fact-based trading, which is basically, fact-based trading involves making decisions based on objective data and analysis, to reduce speculation and subjective biases. Really providing searching for the truth is what we basically do. Looking for clarity. As I always say, and if you don't have clarity, you should not be trading. So when do you get clarity? And how do we do that? We have some resources. We've got our analytics that have been developed over my whole career, and they're used to help you standardize your decision process, create that matrix. We have applications that normalize the analytics into your workflow, and then we have some trader development programs that can work with you to optimize your tactics. And what we do consistently is, it's the same approach for any market, any asset class, any time frame. We're going to identify the context of the state and what those characteristics are, and then we're going to look for and highlight the alignment of the structure points that define that state. So where does that state change, and where the decisions made to either persist or transition to a new state, and then define an expectation into an if-then statement of what's more likely to occur. And what our method really does is it incorporates this statistical outside view, which helps slow down the decision-making process to minimize biases. And so this is from Nobel Prize laureate Daniel Kahneman's book, Thinking Fast and Slow. The outside view offers more accurate predictions than the inside view, and this is really talking about and speaking to your intuitive function. And when you typically, as you live your life and you make decisions, it's yes, no, this, that, and you're not really thinking. And then sometimes you have to slow down and do some statistical thought. And basically, when you slow down the decision process and you focus on the facts, which it helps to minimize some of these cognitive biases that we have. You've got this you did all this technical work that basically said buy, and then all of a sudden, that you're anchored on that, and you can't get that out of your head, and you don't see what's really in front of you. What the truth is that the market's breaking structure and things are changing, and so having a fact baseline makes it easier to do that. And so, here, we've got specific tools that go from basically the macro structure down into the microstructure. And so you can find those at dharmacapital.trade. And if you like this video, and you appreciate what we go over, definitely like it, and subscribe to our YouTube channel. So we're going to get into a little bit something different today. We're going to talk about time phase structure. We've gone over different structures, and time phase structure is part of the price discovery process, and that divides a time frame into segments based on behavioral characteristics. And so previously we've talked about price structure and time frame structure. What's the previous day's high, low, last midpoint, the week, month, quarter, using those time frame structures, along with market structure. What is the structure that defines the market state? And we're going to get into a little bit on time phase structure, which breaks the time period into 4 segments, 2 primary segments. An opening phase and a settlement phase. And then you have a discovery and a validation phase. And so just to keep it high level and simple, when opening phase, you have classic opening range and the behaviors of market participants in these different phases. And we're going to talk about settlement phase today because that's the phase we're in. We're basically, we are in the yearly settlement phase. December is the settlement month for the year. We're also in the last 2 weeks of the quarter, so that's the settlement phase of the quarter. And so these are huge time frames. Coming into the end of the year is massive. It's definitely, there's a lot of behavioral aspects that are coming into play right now, and so this is going to affect market behavior, and we need to be aware of it, and we need to adjust our tactics. And so during the settlement time phase, it's the end of the time frame period. Again, that can be year, quarter, month, week, the day, in which open positions must be closed for the purpose of settlement. Settlement phase price range is an important reference price for the next cycle of price discovery. So what's happening during this time phase is going to affect what happens in the opening phase. And so and that's really key, and that's going to create a range. So at the end of the time frame, this price action is going to create a settlement range, and which is going to be defined by the high low of that range. And so we're going to use that structure in the opening. And for us that's going to be the coming year. But it's basically, it happens every day. So the settlement phase is influenced by several factors, such as margin. For on a daily basis, you've got the margin calls. And that's why the end of the trade periods are really difficult, because you've got things are happening that have nothing to do with technically or what's happening within the market structure. It's just people just need to get stuff done. They got to get out of their trades. Things are expiring. A fund has to make allocation adjustments. So price movement during this phase is driven by non-market related liquidity factors, and that you need to really be aware of that, because when someone has to, a major fund has to come in and do something or get out, they can just drive prices, and you don't want to be stuck on the wrong side of that. Another part on the expiration is of derivatives, the end of the higher time frame periods. So end of the month, end of the quarter, and we're coming into end of the year. It's going to have a major impact on the behavior of the market. And so so during the settlement, prices can rapidly fluctuate between boundaries, several times. You can have some big swings, and that's typically what happens. The behaviors in the settlement are, you're going to have these big swings, and sometimes you just also have these linear moves, because let's say everyone wants to put on their balance sheet that they were long Bitcoin this year. Well, so they need to do it now, because then in their reports next year it'll say we have Bitcoin. And you could, and so there's absolutely right now, current market, we got, there's potential for, kind of a railroad run. We've already had some, kind of volatile digestion to start the settlement phase, but these become significant reference points, and so this is just a, kind of an overview of how you're in your mind of how you want to, kind of view this stuff, and where you have a a settlement period that goes into the opening, then to this discovery, to the validation, to then again to settlement, and this is kind of the time phase cycle. And so we're at this end phase cycle where, and this is the most difficult time to trade, period. Any day, we're looking at a 24-hour time phase here, and this is the, and this is the last 4 hours of the trading period. And so the last 4 hours of any, if you're talking about, Forex, or we're talking about crypto here, for me, 6 p.m. is when we get our, is when you basically crypto rolls, because that's the UTC time, and so basically, after 2 p.m. Chicago time, you have to be careful if you really don't want to put any new trades on, basically. There's a lot of different things going against you, but you have this settlement period just increases the risk of what you have going on there. And so that's something that we're going to get into today. And the other thing I want to talk about is having a mandate. So as a trader, it makes it a lot easier if you come in and say, I'm a buyer, I'm a seller. And then, and for crypto, taking the aspect of you're holding bags, you've got your crypto, and you're looking for, you're trading this stuff, but you're looking to build a position in digital assets. And so I'm going to kind of keep that, that's my mandate. And so I'm going to talk about a couple different strategies that we're going to look at in the market and see how they play out. But basically, if we have a net long crypto mandate, what are we looking to do? We're looking to accumulate. We want to, and so we want to get involved at favorable prices. We want to reduce profit giveback. So these markets, you do need to trade them. They're so fast. You got to make decisions quick. And if you're not, you're going to be, you get sad when the market gives you all this dough and then it takes it away. So we want to reduce our profit giveback exposure. We want to hedge ourselves on negative momentum shifts. So and that can be either short-term shifts or longer term. If you've got an expenditure coming up, and you want to definitely be able to kind of hedge that, especially if the market goes into a down cycle. And so, and the other thing is how leveraging up on positive momentum shifts. So if the market doesn't give us an opportunity to really enter where we want to, well, then we can leverage up on other shorter term positive momentum shifts to increase our position in our digital assets. And so we're going to talk about, identify a couple different entry strategy themes to do this. We're either going to fade momentum, so if we identify some structure, we're going to fade momentum in front of it, so basically using limit orders or to do that. We're coming in, the primary feature of a fade is that you're in front of the figure. So if you're fading to sell, you're fading in front. If you're fading to buy, you're fading in front and you're entering, because the expectation is that structure is going to hold. And that's when you'd use a fade. The other tactic would be a breakout. So we're going to trade with momentum. The market starts to move, and we're going to trade a breakout through structure. And then the other entry strategy would be a reversal. So it's kind of a false breakout where if we're looking for, in this example, we've got a buy reversal. So this is a great strategy to use in a corrective trade. So instead of catching a falling knife, step in front of some structure point, we let the market take out structure, get all excited, and then it exhausts, and you get that capitulation, and then the market stabilizes above structure, and so basically we're allowing the market to tell us that this corrective move is over, and we will use a reversal strategy for that. So depending on the characteristics of the state, the expectation, the if-then, it determines what strategies we want to do. And for having a mandate, it really keeps things simple. You've got a program and you just run it, and you don't have to think about what you're doing. You're just executing, and you have your themes that you're looking to get involved with. So on an accumulation theme, if we just simplify this with structure, and if we identify what we call our critical range with the upside pivot, downside pivot, and a midpoint pivotal point called the directional, we can overlaying these strategies on that for an accumulation. Where the expectation is we want to buy dips, buy low, sell high. That's our primary strategy here. And so we're going to fade momentum off lower structure. And we're also going to potentially look for reversals. So if the market if it breaks structure, well, then now we've got an opportunity to execute a reversal. And so these are entry strategy themes for accumulation. And it's going to help us get involved and accumulate additional crypto at good entry areas where our risk is minimized. And we're going to use those same tactics for profit give back. So we're going to fade momentum into our upper structure and look for momentum reversals at our upper structure. So if a market is going sideways or in a negative state, we're going to look to more fade momentum into upper structure. If a market is trending positive and generating buy signal, well, we're going to use upper structure points, and we're going to let the market take them out. We're going to anticipate this thing to break out and to go, but then we're going to be ready that if this thing can't maintain trade above that breakout, well, then that's a trigger that we need to protect our profit give back. And so we're going to use a reversal strategy to do that. And we can look at to hedge our mandate, hedge our net long position with momentum breakouts. And so those can be shorter term breakouts. So if we get a transition through the midpoint of our structure, those are going to give us signals that are kind of temporary. Do we want to sweat it or not? Versus really negative downside breakouts that are going to say, hey, this trend, we're no longer trending positive. This thing is shifting negative, and this could be a sustained break. And you need to do you want to do something about it? Do you want to hedge your position? And to leverage positive shifts, we're going to do the same thing. We can kind of gear up, and as the market starts to make a positive shift through through our directional pivot point, okay, we can jump on that. It has a potential to turn into something bigger, but needs to validate through our upper structure. If it does, boom, now all of a sudden it's kind of a new game on. The market's in the position to potentially extend to the upside. And so these are the strategies we're going to take a look at and see how they played out. And basically, you can use these tactics, and it really helps to give you focus and see clarity when you have a mandate. I highly recommend giving yourself a mandate when you're trading, so you're just not what do I want to do? No, you've got a mandate and you're executing. And so these are basically the key strategies to do that. So let's take a look at the market and see what we got going on here in Bitcoin. Before I get into this, I want to show you guys some longer term stuff. Because it's interesting here. We're coming into the end of the year. So I'm gonna before we go into the microstructure, let's take a look at the big picture for Bitcoin here. So what we're looking at here is a 240-minute chart. We've got our time frame structure here, which identifies the previous quarter high, low, midpoint, and close. So this gives us some insight, and you know, just to kind of point out, you know, here's what happened during the, you know, the start of the quarter. You know, that you know, it's identifying here's the previous quarter midpoint. That's our momentum level. So this is a potential place to leverage up the market. You know, it gave us this opportunity here, and it's, you know, we had this wind up within the previous quarter close, previous quarter midpoint. You know, just this basic, you know, factual structure, you know, really set up the quarter. And you know, we were talking about the settlement phase. So I'm going to draw a rectangle in here off the previous quarter settlement phase. So, you know, this was, you know, Q3, you know, basically the last 2 weeks of the quarter, you know, we created this settlement range, and you can see, you know, the market pressed it to the upside, pressed it to the downside, you know, basically had this digestive action as we came into the settlement of Q3. And so now we have the opening of Q4, and so this structure is going to provide some guidance to, you know, here's the, you know, last quarter, the highest people would buy it, you know, was here, and lowest, and they pressed it to the downside down to 26,000 here, and so we created this settlement range. And this is what we're teeing up for 2024 with what's the price action that we're currently defining in the last 2 weeks of the year here. And so you can see here, you know, just these basic facts and how they, you know, really teed off this major advance in Bitcoin for the Q4. You had a settlement range, so we know that this 26,000 level was the base, and then we had this, you know, let's say 27,500 was the top of the settlement range. So immediately the market breaks out of the top of the settlement range, so it's positive. And it continues and then we also look at that midpoint. So the midpoint is basically coming in around the previous quarter close. So basically the market just had a lot of different features, and we have, let me pull this up a little bit so you can see it. I'll just draw this in here. So you have the settlement range high, settlement range low, settlement range midpoint, and we can see that the market immediately said, hey, we're more positive in the new quarter. We got more buyers. We're getting above the settlement range high. That's positive. It came into the previous quarter midpoint, which is our momentum level. You know, so this is that breakout level. And you know, just as the settlement range can be a little wily, you know, the first, you know, the opening phase is the same thing. You know, so just as the settlement range, people are settling up their margins. Well, in the opening phase, you got a lot of different. You got funds that are coming in. Hey, we got new allocations that wanted to start at the start of the month, start of this quarter. We've got to get that money in. We got to get. You know, we have to do that. And you have other people that are getting out of there. You know, we've got these people that want to get out, and so then those guys are selling. And so it just creates, that you get this volatility during the start and the end of time frames that has nothing to do with anything. And so you get this initial surge here. Bottom line, you need to be careful. You need to be patient. You need to wait for the market to create this structure to give you clarity of what's happening. And so basically after that time frame, you have these ranges that you can use to get some insight. And so that's what's happening here. With the settlement phase, it gave us some insight that, okay, we know that this is a good base. We know that if we're trading above 27,600, it's positive. Then we look at the previous quarter range that we have. We got the previous quarter high, low, midpoint, and close. We know that's our momentum level, and we know that if we're net change positive for the next quarter, we're net change positive for the quarter. That's positive. And so we're hanging out positive. We can't go negative. We're still holding on to the settlement range midpoint. It stabilizes, make a decision, and then boom, we have that big news event when they were on the ETFs, and that got this whole thing started, and then we had immediate pullback. But the pullback came back down to the previous quarter midpoint, and we had this, and so the settlement range gave us that breakout. And then you can also see, if we take this, let's change the color here. So just as we have the settlement range, we create an opening range. And so that opening range, let me just pull it back here. Basically, it's coming in here. So then we can use that range for our signal. And so this basically broke us out of the opening range zone. So we have a bunch of things that are telling us positive, and we're above the midpoint. What's the minimum expectation? We're coming here. All right, so now we're coming into what are we doing now? But that set up that whole rally. Just real simple facts. Basically, and this is live, right? So we've got, we're building this settlement range is being built right now. The key thing to understand is that this is going to be a big an important range for next year. And so as we're identifying this range, keeping an eye on that midpoint, because that's going to be a good momentum level. So again, going back to just different fact-based tools that we can use to implement our accumulation, profit give back, downside risk, and upside opportunity. This is here you go. Here's your top, here's your bottom, here's your midpoint. Obviously this is still in play to the end of the year, but the end of the year, then that sets the base for the coming, for the opening phase, the first couple weeks of the year. And so we're going to use that. But this midpoint is a good level currently. So that's basically 42,100 in Bitcoin. It's going to be a good base. Any questions on that? Okay, so I'm going to throw on the market structure just so since we're here and we're looking at this, and we can get a sense of the power of market structure. So here we had the sentiment bias, which is our over-under number. Buy breaks above this point, sell rallies below this point, and you can see, you know, the metric boundary was basically contained with that whole opening range. And so we had that settlement range below the market here. So it's kind of just overlays. So this settlement range area of influence is going to stop at the end of the opening range, and the opening range is going to continue through for the balance of the quarter. But this gave us, you know, understanding that we had the settlement range lows here. It gave us, you know, more insight to that this, you know, basically 26,000 was our risk. And we could put the critical range on and our validation points. And so we had, you know, a market that's moving from sentiment and it breaks out to the upside, doesn't validate, comes back to sentiment, and then we validate here. So this is a validation point that tells us that this breakout from sentiment is good. And if we look at it, two average price minute distance move, 2 segment move, it's 1, 2. So this is basically that target from this signal. This is a fresh signal because this is the top of our critical range. So that was the range that I identified earlier, that we identified this upside pivot, downside pivot, and we have that the pivotal midpoint. And so this is a breakout telling us that this is that momentum signal. You know, we didn't get the opportunity to buy down here and to accumulate. We did get a leverage opportunity to buy here. And since this is a positive signal, we're not going to step in front of this and fade it. We're going to look for a reversal because it's a positive signal. We're not going to step in front of a freight train, and they don't give us a reversal, so they don't tell us to adjust our profit give back. But if we traded back below 32,000, we would, but they don't. And so here, this is a bigger signal because it's saying, hey, we got a breakout. And since this is a breakout of this critical range, what can it do? It can go 2 segments higher. Wrong one. And so that's here. So they attained our target. And so this is typical action where you had this beautiful trending market that attains a 2 segment move, 2 APMD move on a critical range breakout, and we get a pullback. These are great, you know, this is a great place just even standardizing your exits to 2 APMDs to sell calls. You know, you get this is a beautiful call sell because it's coming into a target. You don't have to get out of your hold, but you can sell calls against this strike because you've already had this big acceleration. You had volatility pick up, and you're coming into a target area that the expectation is it's more likely to at least go sideways and pause, and then we actually had a break. And so I'll put our validation points on here. And that break pulled back to our figure here, and basically we stabilized there, and we had this digestion within this zone. So within the 44,000 to 41,000 area of digestion, and that's just after attaining this target. And typically that's what happens. Typically this is it. It's just done for the year. We attained it. We attained our target, and it's going to go sideways, and we're going to wait for new structure. The fact that we're trading up here is giving us, now, and we're in the settlement period. Are we just going to have a churn settlement period, or is this market ready to just extend up to the third target, which would be 51,000, basically, strike? And that's what we're doing right now. So again, we're in the settlement phase. We're either going to go, this is either the high of the move here, and it's going to pull back, or we're going to, we have the potential to scale because, like I said, people just want to, they need to get Bitcoin on their balance sheet. So we can take this structure down to different levels, and this is the quarterly structure. So this is the basically the large structure that we're coming into right now. And now we're going to dive into what's happening at the moment, right here, right now, using shorter term time frames. So let me just clear this and just kind of go there. So we can look at monthly structure, and when you see the alignment with the quarterly and the monthly, and then you have this good alignment here at basically 44,500. You've got monthly alignment there as well. Get rid of that. Now we'll go into the weekly. Again, here again we've got weekly structure that's coming into play at the same point. So we got all this alignment coming in, and then look at the daily structure. And daily we're breaking out. And so let's go to let's see a bigger picture on the daily and what's happening there. So this is the same routine where we've got our range for the day. We have our pivotal midpoint, so just going over that same structure that we looked at for the quarterly. And so here we had the settlement range from last night. Same setup, and this is the beauty of the structure as well, is that it doesn't matter what time frame you're dealing with. It's all the same. And it's basically had a mirror of what happened with the quarterly happening here today on the daily, because you have similar price map structure, meaning that the sentiment bias was in the middle of the critical range. Let me get rid of these major levels here. So here's our critical range with sentiment balanced. This, anytime sentiment's balanced, it's the potential for a move. Here's the 4-hour settlement range and how it contained the opening range. And then, basically it narrowed, and it really defined the upper metric boundary of the directional. So then when we got the breakout, you had a lot of different, a lot of different things happening at the same time. Where, let me get rid of the weekly here. So just looking at the daily structure, we've got the previous day's close, previous day's midpoint, previous day's high, previous day's low. Here's our settlement range. And we can see how the market stayed net change positive. And that's basically just under the midpoint of the settlement range. We tightened that up in the first 4 hours. You kind of just be patient, you wait, and then all of a sudden the market gave us that signal here, and here's the momentum level, the previous day's midpoint, and the market accelerates. And then building clarity, you know, okay, now we know the sentiment bias is here as well. So now all of a sudden we have more clarity that this thing wants to go higher, and this actually gets us in sooner, and then we validate here. And the expectation is that we're going to see a 2 APMD move, which is here. And when we get there, the expectation is it's going to pause. And it takes it out, so this tells us we're good, but we might be a little ahead of ourselves. And so then we have a fresh breakout of this critical range. And on this pullback here, the expectation is, yeah, it should stabilize above this critical range positive situation, which is also the previous day's high. So it gives you, you know, here we have clarity of this, and so this is what occurred here. So we have our macro structure, and we're looking for the alignment with the microstructure. So we can, you know, the way I like to use Bookmap with this on the microstructure, extend that a little bit here. You know, we have this big intensity of trade happening coming into this here, but on the, you know, if we only have this and we don't know anything else, you know, taking into account that the expectation is that from this signal here, we're going here. We're looking for a 2 APMD move. So when we're coming into this area, we're getting this big intensity of trade. And we come in, we take it out. And then we come back in and we get a little bit less intensity of trade, but we have all this resting paper we're coming into here too. And the data is not going back far enough, but this is important because you had all this resting paper that this market's coming into, and this paper starts to line up actually here. So basically that's here, but it lines up all the way through this thing up to this point. So when I know that this is my target, but then I see all this resting paper in the book in front of this figure, and this stuff's been sitting there for a while, I know that, you know, I know this thing's going to run into some, I know this is the natural target, and then I have everything lined up. Bottom line, we're not looking to sell this thing, right? And we're looking to protect profits, but we're not looking to take a short position. That's for, you know, this is just kind of basic 101 stuff. Is if the market's above the previous day's high, this is not interesting to catch this move. This is interesting to buy this break, and you don't want to mess around with taking this short-term opportunity or catching this little move to miss buying this. Because by buying this, you're getting involved with an opportunity that can extend up to here. And based on that, the longer term stuff that we went through, it could be much more substantial. It could be a move up to here. So, and this can just get you turned around and just cost you money, and it's really fast. So, you know, absolutely, you're coming into here, you're looking to protect profit give back. You see that all this liquidity that's building up at this structure point. So when it's coming into here, you know it's running into trouble and it's already extended. So this was kind of natural. Where should the market stabilize? If it's really good, it's going to stabilize above the previous day's high. And as well as, you know, you have structure here and you've got the market structure. It does it. So we get this coming into this liquidity. It's eating it up. Less intensity to trade here. And then we get the break. And I like to see this stuff where people are puking out in front of structure. So they're puking out here. And right into a place to buy. So I like to see, you know, if you're getting that happen on a break-in structure below here, and it continues and it continues to do that, and we get and we get this kind of liquidity shift down, well then that tells me that things are changing, and that would be a reversal for that profit give back situation. The market was if we started to see liquidity shifts move down, but we don't. Also, with this resting paper not moving and just sitting there, the market was going to want to go take it out, or at least test it. So this turned into a great opportunity, where you had people get excited. That was the expectation, that if the market's going to extend higher. We actually posted this in the Discord room earlier, identifying this 43,500 level as the base. But this is something, when you have the right tools, this is something that you can do on your own as well, because that's the decision matrix. That's the if then. If the market breaks out above the sentiment, it has a potential to rally 2 APMDs. If it rallies 2 APMDs, it's more likely we're going to get some type of pause. If the aggressive buy-in is, if we break out of the critical range and we validate through the critical range positive extreme, any pullback to that level should stabilize if this thing's going to stay aggressive. If it doesn't, we're going back to a digestive trade. If it does, the market can extend up to the UT2. So that this is just all the same within the same method. So let's just do a shorter term one on Ether. I'm not going to get into the longer term stuff. If you want to see the longer term stuff, I posted it in the room. I did a video on the longer term stuff on Ether, so you guys can check that out on our YouTube channel, and I also posted it in the Discord. So we have our opening range, our settlement range here. For the day. For Ether. Let me just clear this up for now, just so we can just keep this really clean. Here's our previous day's high, previous day's low, previous day's close, previous day's midpoint. Net change positive on the day is net change positive on the day. It's a good thing. What happens on the opening here? Well, on the here's our settlement range. It's so important to have a macrostructure outlook before you get into the microstructure, because otherwise you're just running into walls. All this shifts and things with liquidity, become a little bit irrelevant when if you don't know what the bigger picture is. And if you're just playing the short-term game, you're just going to get run over. You're risking way too much to participate in the markets to take advantage of smaller moves. You need to participate in the bigger moves, and there's no reason you can't. You just have to get that clarity, and then once you have the clarity with what your mandate is, then you go into the microstructure to see what the immediacy of what's happening is the microstructure supporting that mandate, because that's going to give you your timing. That's the real power of the microstructure, and the real power of this platform is it helps to time when. So with the settlement phase here, this helped tee us up as well. Just this tool. We know net change positive on the day is positive on the day. You can't. That's a fact. And when we have the settlement range, we know that high and that low are important. And right from the get-go, we hold the previous day's close, and we take out the opening settlement range high. It's just showing the sign of strength. The market, the previous session, it went above that as high as it would go in the previous session, and it tells us the market's a little stronger. And then what happens in the opening range? It likes to test the boundaries of the settlement range. And so it makes a play for the lower boundary. So as long as we're above that lower boundary, we're still, the market hasn't made a decision, but what it did do, it gave us a tell that it wants to go higher here. Putting the directional on there, it gives a little more insight, a little different story, where we're not so convinced, and we're really keen off of this previous day's midpoint, which is normal because that's our momentum shift anyways for the previous day. So we know that that's really the validation point for a higher move. So this market, it's holding above the directional, but it doesn't press that metric, and here it presses below. And so what happens? The settlement range helps us with this, identifying that, hey, we're still part of the opening phase, and we can't take out the settlement low. So unless we go below 2170 on Ether, it's still not, it really hasn't validated anything yet. It's still this opening phase that's making the decision. And so before the opening phase is over, the market's back up within the directional, and then it makes this move, and now we get a validation above the previous day's midpoint. So here's that jump on. Let's put the critical range on here just so we can see. Here's the accumulation area, and here's a positive momentum shift. If we had a failure here, this would be a short-term negative momentum shift down to this area. So we're at risk from 2170 down to 2120, but that's going to be where we're going to look to accumulate. One thing about Ether that's different than Bitcoin is sentiment is above the market. So this is sell rallies below here, buy breaks above here. So this is our over-under number. Versus Bitcoin was here. So Bitcoin was in a more positive situation. So the market structure just told you that Bitcoin was going to outperform, was more likely to outperform Ether, just based on where its sentiment bias is. So let's put our validation points on here. So for this market, it's gearing up, it's excited with Bitcoin, and it breaks out, but it can't validate to the upside. Again, it's all just an if-then statement. So the market can't validate here, it tells you there's an issue. It tells us a couple things here. We go above the previous day's high point. And I don't have, well, I may have some of it here. So we have some liquidity here resting here at this level. We know this is a big point, and then it kind of builds up here. But we know this is a big point, so we have confluence. So as we're getting this breakout, and we're getting this big liquidity push through our sentiment bias here, a lot of excitement. We know that this is the validation point, and we can see that the market is identifying that as well. So we had a full segment and a half move, into major structure, and the market validates that structure here. It goes above it, says it's positive. It's and we get this move. It can't validate, and then when we start trading back below the previous day's high point, this is a signal that this trade is exhausted. This positive move is in question. And so typically, and now with the being coming up to near the end part of the session, like I said, around 2 p.m. Chicago time, or basically in another half hour here, or an hour, we're going to start the settlement phase for the next day, and things are going to get choppy, and we've already broken structure. So as the market came up here, this is that reversal signal where the market breaks out to the upside, but then it can't follow through. So instead of stepping in front of this positive signal, waiting for the reversal, and then this is a signal for the profit give back. And then as the farther we go into the time frame, and as we start to come into the new settlement phase, it's more likely just going to be sideways, and we're going to tee up for the next session. And so then we'll identify the settlement range coming into the new period, and we'll use that when the market reopens up here at, for the new structure at 6 p.m. CST time and midnight UTC time. And then using the order book, so on this break here, this is another one of those situations where you had, based on our structure, we know that if the market stabilizes here, a lot of times it's going to look to stabilize here. It's just symmetrical around this sentiment bias. It's just behavior that is typical, and it happens on any time frame. And so as the market's coming into here, and you get this, this big sellers, and you have this resting paper here that's in alignment with structure, and the expectation is the market broke out to the upside, couldn't follow through, and so we have more of an exhaust into a sideways trade potentially for the balance of the trade period, and we get this big selling here, and we see this, this is a tell that we're going to bounce and get a move back up to here. I mean, it's not a big move, but it's money. And so now, and the other thing I like with this setup here for Ether is we've got the VWAP coming in, basically at the figure. So if at the end of the day here, so we did have this exhaustive period, it came into this structure here. So now if we start to, we're not seeing this right now, but let's say we see this liquidity start to shift up, and it starts to defend this area, and then we see it continue to press up. The trigger would come if the market, getting back above the VWAP here, which would put us back above sentiment, with the potential coming into the settlement period that, hey, we want to get in, the settlement's either going to be digestive and go sideways. Absolutely, we could squeeze back down to 2200, 2190, this area. But if when we look at the longer term structure, it's a little different. Let me throw it up real quick. This is the, basically we're coming into the weekly directional here. So, and this is something I identified in the video if you want to go through it, that this, 2250 is a big turning point. And so you have that kind of in alignment, this liquidity just a little bit above it. You've got the VWAP coming in here, but basically we start trading back above this VWAP back through the sentiment. That's the upside trigger, and until that point, it's not that interesting. It's more sideways. So having a mandate makes things easier. Having, identifying the facts and the structure gives you clarity. Having a tool like ours to identify the market structure helps you anticipate opportunity and proactively manage your risk. And then observing the price action within structure and using the microstructure to give you insight to time your opportunities. That's the process. Basically just you're going from macro structure into the microstructure to get clarity of when the market's ready to do something. Looking for, intensity of trade and liquidity. Looking at where the market resting paper is that's supporting within structure. Where's the alignment? When you have resting paper in the middle, it's more likely this is just, something to eat up, to take out. Looking at, seeing this liquidity move away from this is an interesting thing, that if we did start to rotate higher, it's not going to be defended as much, and that could be potential validation of a new move. But also this structure is going to change in 5 hours. So these are great. Definitely, if you're involved in crypto, you're probably holding, and if you are, absolutely always having these in the back of your mind, along with any kind of day trading you're doing. But things should kind of shift. When you keep your brain set in these modes, it makes it a lot easier. It really does. And again, I invite you to visit us at dharmacapital.trade. We'll set you up with a trial with our integrations. We have we have our integration with Bookmap, where our structure is identified in the cloud notes, and we're using the consolidated order books. And we have our integrations with other platforms as well for a bigger picture, so for the macro structure. And if you're interested in our playbook, I didn't go over that today, but that helps to identify really the state characteristics of a market, its structure, and the strategy themes to I look for that are basically controlling the market on the macro structure, as well as some options insights to that you can incorporate into your trading as well. Trading options with crypto is great, especially if you're holding a spot position, to be able to come in with a derivative, and using the order book as well to give you insight to when to do it. So feel free to contact me, DM me directly in Discord. You can also email us at info@dharmacapital.trade. Hope everyone is all geared up and ready for these holidays. Markets are definitely teed up for something interesting for 2024. So enjoy the time with your families, and best of luck. Cheers.